We've been seeing these price drops in both gold and silver now and then, and it might surprise some of you to hear that some of it actually makes sense. One of the reasons that the price of gold and silver go up is economic uncertainty. Good old-fashioned fear. Now, it's not a black or white factor in price. We're seeing a case right now where even though the economy has looked like a mess for months, gold and silver prices are still relatively muted. The gold's up, 5.5%, about $100 on the year, but that isn't spectacular given the wider economic picture. The variable here, of course, is interest rates, because that introduces competition in the form of safe haven assets with guaranteed returns. We're talking about things like treasury bonds or bills, even high interest savings accounts right now. So what happens in a situation with high interest rates and a widely held sentiment that maybe things aren't so bad? Well, we might be about to find out. Before we get back to it, if you're looking for precious metals, hit up SD Bullion. New customers even get gold and silver for spot. It's sdbullion.com/new. So we can't really put this into actual statistical perspective because everybody has different models for the likelihood of a recession. But if we were to look at individual forecasts, the banks are consistently lowering the odds of it happening. You look at Goldman Sachs, they give a 20% chance of a recession in 2024 right now. It's down from 25% from last month and 35% the month prior. A bank rate, they give it a 59%. That's down from 66% a few months ago. So everybody has different statistics, but they're all going the same way. Bloomberg polled economists, and 71% of them say it's less than 50% likely. A few months ago, about half of them are given those odds. So it's a really weird way of saying that more economists think that it's less likely that we'll see a U.S. recession in 2024. And the same actually goes for global recession concerns too. So keep in mind here, though, that it's probably fair to assume that if the price of gold slides much further, then other markets, particularly Asian markets, will buy more. So none of this is foretelling a huge crash in gold price. It's signaling something a little bit more subtle, and it's signaling what could happen inside a pretty specific window of time. Now, that window of time is effectively the time between right now and whenever the Fed makes it clear that they're done with rate hikes. And depending on the sentiment, maybe even now and the point the Fed reduces rates. Because like I pointed out earlier, higher rates mean higher yields on those competing products like the treasury bonds, the bills, those high yield savings accounts. So that's one strike. And if you were to combine the high yield safe haven assets with no real acute concern for the economy, you take away two drivers on gold demand and I guess two drivers for retail silver demand as well. So what's the time frame on this window? Well, Goldman Sachs economists forecast no rate cuts from the Federal Reserve until Q2 of next year. And I've seen other forecasts for a little bit later in 2024, so somewhere between 8 and 12 months. Now, if the market confidence kicks into full gear before those rate cuts, a third strike against gold demand could be that investors would maybe go further into risk mode. So more capital into growth areas, less into safe havens. None of this means that gold is a dog. It simply means there's a case that we could see a lag in gold price that actually does make sense. We could say, positive economic sentiment, maybe that part doesn't make sense itself, but regardless of what drives it, the result is the same. And the perception that the economy is on the upswing, that savings options are going to continue paying 5%, and the market still has legs, well, that means that gold will probably look a little bit less sexy to the general population. Nobody said the general population is right. So what does it all mean? Well, it really just means that it shouldn't be a surprise if we see a drop in gold price the next few months. There's a lot of talk of the opposite of gold shooting back to chase those all-time highs, but it's worth at least considering that these two ideas could line up. The Fed would hold its hawkish stance, and data suggests that things actually look up. Now, those two cases together would tell me not to expect a big run on gold price, at least until something changes. Now, as for silver, we're looking at more or less the same situation along with relatively soft manufacturing because the sentiment doesn't really line up with the actual work being done. So silver doesn't have any better outlook than gold that I can see. That's why I just don't believe all the talk about silver being the better buy right now. If we were to look at what's actually happening, gold is in a better position. Something has to change for silver to take off in a way that was going to outperform gold. Now, it could happen, but planning for silver to outperform gold is just placing a bet any way you look at it. Now, price appreciation on precious metals, regardless of what we're talking about, gold or silver, it's always going to be about patience and time. I wouldn't buy gold or silver planning to make quick gains, but I would buy planning for appreciation over time. It's actually how I do buy it. And when prices drop, I have trouble seeing it as poor performance. I actually see it more as buying when the general population is bored, and then less when it's paying attention, driving those prices up. So what I'm getting at in this one is really just a condition where gold and silver might drop in price in the coming months without it being a big surprise, and actually without it being something like manipulation, as people like to say. It's at least a possibility. If we want to make up a percentage of that possibility, what is it, 20%, 50%? I'm going to go with 50. I think it's at least as possible that the numbers will continue to be shown in more positive light and people will start getting bored of saving. So let's call it good there. Let us know what you think, whether you think a price drop is likely and whether or not that just gets you more likely to buy. Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.